Greetings, grade 12 learners. My name is Mr. Simbi and welcome to today's accounting lesson. In today's class, I'm going to be doing cash flow statements. So make sure you have a pen, you have a paper. You also need a calculator so that when I do calculations, you're able to follow. This is the curriculum scope for the cash flow statement. However, I will not do everything. Some parts you will do. These are the parts that I am going to do with you. Here are my lesson objectives. We will prepare the cash generated from operations note. This is the note to the cash flow. And then we'll also calculate tax paid, dividends paid, and we will do a calculation that will show the amount that has been spent on the purchase of assets as well as the proceeds when an asset has been sold. Here are some keywords and language. What is a cash flow statement? It is a financial document that provides a summary of the cash and cash equivalents entering and leaving the company. So the main idea of a cash flow statement is to be able to calculate the amount of cash inflows and cash outflows that the company would have experienced in a particular period. In this case, a financial period that is 12 months. And what is cash inflow? Cash inflow is money that is received by a business from its operations. Cash inflows are crucial for maintaining liquidity, operations, and ensuring financial stability. So you have to understand that of the three parts of the cash flow statement, that is the operations, the investment, and then the financing activities, there will be cash inflows and there will also be cash outflows. And the cash flow statement then looks at these inflows and outflows. And what are outflows? It is the money that a business spends to cover expenses, make investments, or pay off its obligations. We're talking about debts in this case. Here are some errors that learners would make when they prepare a cash flow statement. It is the inability to calculate the correct amounts and incorrectly recording inflows instead of outflows. So these are some of the errors. And misclassifying operating expenditures and investing cash flows. Okay, so when you misclassify your operating expenditures as investing cash flows. And then lastly, misclassifying operating or investing cash flows as financing activities. So it has to do with you knowing the format of the cash flow statement. It is very important that you know your format so that you know what goes into operating activities, what goes into investing activities, as well as the financing activities. So format is of great importance. You need to know your format. On the pre-knowledge, this is what you should know and able to do from grade 10. To understand the different parts of the statement of financial position, because when we prepare our cash flow statement, we also get information from the statement of financial position and understand the statement of comprehensive income. We'll need the statement of comprehensive income to get certain figures that we use in the preparation of the cash flow statement. In grade 12, we'll calculate the net profit before tax, income tax, interim, as well as final dividends. You also need to have an understanding of your SARS, income tax, balances, and shareholders for dividends. And you also need to understand your retained income note. Dear learners, let's go for an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. We will now begin to do calculations that pertain to the cash flow statement. And to begin with, we're going to do calculations that relate to cash generated from operations. But here are some of the problems that you may face when you want to prepare this particular note. The failure to record depreciation and interest expense. Remember, these must be added. You will see when I do that. The failure to calculate inflows and outflows that relate to changes in working capital. I have a very interesting trick for you that I want to teach you that will make it easy for you to understand this part. Remember, in grade 10 and 11, even here in grade 12, we have calculated depreciation and we have shown it as an expense in the statement of comprehensive income. And we have prepared the statement of financial position where we have recorded inventory, trade and other receivables, as well trade and other payables. And it is very important to note that these will now form part of our working capital. You will see as we do calculations on it. The information that we're given relates to Dust Limited on 28th February. And the question then is, what do I do with this information when I'm to prepare the reconciliation between net profit before tax and cash generated from operations? The first thing that you need to do is to get the profit before tax. But here you can see we're given the profit after tax. That means I will take the profit after tax, which is my 555,500. Then I'll add back my income tax, which is 394,000. That will take me back now to my profit before tax, which in this case is going to be 949,500. This one was simple. If you're given net profit after tax and you need net profit before tax, you simply add that income tax amount back. And then we have adjustments in respect of. The first one is interest expense. So here we have interest on loan. We're coming and we're going to add that amount. So we come here, it becomes 252,000. We're adding the interest expense amount. Then we also come to depreciation. Then we add the depreciation, which is 453,000. So we add these ones. Please have your calculators close because I want us to add these three figures now. We'll now say 949,500, that is 949,500 plus 252,000 plus 453,000. How much do you get on your calculator? 1,654,500. 1,654,500 is what you then have as your operating profit before changes in working capital. That means the next part we're going to go now is the changes in working capital. Let's quickly go and look at the changes in working capital. Now that we've calculated our profit before changes in working capital, remember we've done that. Now we're going to come and do the changes in working capital. When we do the changes in working capital, you have to look at your information. We're given information for the year 2020 and the year 2021. And format is very, very important. You have to know your format. Okay. And the first thing that we're going to start with is the changes in inventory. The changes in inventories. Okay. When you look at your inventories, you find that in 2020 it was 272. In 2021, it is 254. You can see that is a decrease. A decrease in inventory simply means a cash inflow. A decrease in inventory means a cash inflow. But there's another quicker way of doing this again, where you come and I show you the trick that I promised you earlier on. That when you are dealing with assets, you will now say the previous year, which is 2020, subtract the current year, 2021. Then you trust in your calculator. Okay, let's see. If we come here, we'll now say on our changes in working capital, on inventory, we can see here that this is a decrease from 272 to 254. It is a decrease. So other papers will come and say underline the correct answer. So you come here and then you underline what? Decrease. All right? It is a decrease in inventory. And then you come here. I'm going to show you the method that I was talking about. You may call it the calculator method, whereby you now say previous. Previous is 2020. You have your 272,000. Then you say minus your current year, 2021, 254,000. You close bracket. Then you will now say on your calculator, let's punch it together. You will now say your 272,000. Here's your 272,000 then minus your 254,000, and then you can see that my answer here, the 18,000, it's a positive 18,000, So when I come here, I'm just going to write my 18,000, a positive one. That means it's cash inflow, positive cash inflow. Okay, let's see when we do the next one. The next one is either an increase or a decrease in trade and other receivables. Here is my receivables. So receivables are also part of my assets. So what do I now say? I'll look here. Do I see an increase or a decrease? 770, 1,638,000. Certainly an increase. So I'll underline the correct answer. It is an increase in trade and other receivables. And then remember, it's an asset. So I'll say previous. Previous is what? 770,000 minus current 1,638,000. I close the bracket. Let me see if I punch this in the calculator. What am I going to get? When I come to my calculator, I'll now say 770,000, then I'll say minus 1,638,000, 1,638,000, and then okay. Now you can see my answer has a negative sign in front. That means when I come here, I'm now going to say it's a negative 868, a negative 868,000. It's a negative 868. That simply means it's a cash outflow because it's a negative in this case. That makes it a cash outflow. You got the trick now, okay? If your calculator does not give you a negative, it will give you a positive. A positive means cash inflow. Negative means cash outflow. But you can also understand that when your trade and other receivables increase, that is cash outflow. Let's go to the last one now. That is our trade and other payables. When we come to our trade and other payables, remember again, so we are looking at 2020, it's 692,500, and then 2021, 479,500. Increase or decrease in this case? That is a decrease. So I'll underline the correct answer here, and then I'll come. Now that I'm dealing with payables, these are liabilities. So I'll say current, which is 2021, minus my previous, which is 2020. So I'll come here now. Then I'll say, how much is my 2021? 479,500 minus my previous year, which is 692,500 minus 692,500. I close my bracket. Let's quickly come to our calculator, and then we see what it will tell us. So I will now say 479,500. Then I'll say minus what? 692,500. How much do I end up with? A negative 213,000. So I'll come here, then I'll get a negative 213,000. That tells me it's a cash outflow. So I can complete this part now where you're going to add these three figures to give you your changes in working capital. And then eventually this is what I end up with. When I've completed my note, then I get 591,500 is my cash generated from operations. And then I bring it over here. Now we are already preparing the cash flow statement in this case now. Because remember, this was the note that we're doing over here. Now we got the amount that is cash generated from operations, 591,500. From there, I begin to prepare my cash flow. I know that with interest, already it's interest paid. Once it is paid, it's cash outflow. So I'm going to put my bracket in already before I even put the figure, because I know once it's paid, it's cash outflow. And then my interest paid, I will simply take the same interest expense amount. But in the cash flow, it's now interest paid. And then I have my 252,000 over there. Okay, let's quickly rush and do the next calculation. The next calculation now is on taxation paid. The biggest challenge with taxation paid is the inability to calculate the correct amount that has been paid for taxation. But in this class, I'm going to assist you on how to do that. Now, with income tax, when you're calculating your taxation paid, this concept is new in grade 12. In grade 10 and grade 11, we did not do this one. So it is new in grade 12. I'm going to show you how to calculate taxation paid. We are given information here, and we are told this is an extract of the statement of comprehensive income and an extract of the statement of financial position. And what we want to do is to calculate the amount of tax that has been paid. It is very simple. What we will do, remember there are several methods of doing this, I'm just going to show you one method and then I'll move on to the next aspect. You will now say, in 2020, what was your balance? The balance here was credit. That means this was a liability. We were owing SARS for income tax in 2020. So I would come to my income tax account and then I would say my opening balance therefore would be a credit balance, understanding that this is a debit and this is a credit. So I'm going to come to the credit side because in 2020 the balance is credit. So I'll come here, then I'll say balance brought down, that is 23,800. That is the opening balance. And the closing balance in 2021, it is now debit. That means it is now an asset. SARS now owes us as a business. So I'll come here and I'll say balance here. It's balance brought down. That is 4,500. But I understand that if it is balance brought down here, it has to be balance carried down here. So here I'm going to have my balance carried down. That is my 4,500. Are you still following me? Okay. Now, look at this one now. Income tax for the year, it's 415,200. Your income tax will always be recorded on the credit side. So I'll come here, then I'll say income tax. And the income tax amount is 415,200, always on the credit side. So what we want is the bank amount there. Have your calculator closed? We're now going to close this ledger account. I'll now say 23.8 plus 415,200 plus 4,500. How much do you get on your calculator? 443,500. So I'll bring it again here. 443,500. That means here my bank here is going to be the same amount, 443,500. That becomes the amount that is paid over to SARS for tax. All right, this is what someone else would have just done. Remember, we have to record this amount in the cash flow statement. So we'd come here, then we'd say taxation paid. All right, and I'm going to show calculation. So someone would have just said 23.8 plus 415,200 plus 4.5. And then they know it is taxation paid. So here I'm going to get a bracket and then you get your 443,500. As simple as that. Dear learners, let's go for a net break and I'll see you shortly. Welcome back, dear learners. We are now going to look at dividends paid. Now, some of the challenges that you may find is the inability to calculate the correct amount that has been paid for dividends, or it can be the inability to use information in retained income note to calculate for the dividends paid. So you will see that at times you may be given the number of shares and you must calculate dividends, but at times some of the figures are already given to you in your retained income note. Do you know how to use that information when you are calculating dividends paid that is to be shown in the cash flow statement? Remember, not every time will the examiner test the entire cash flow statement. At times they will test parts of the cash flow statement, but it is wise that you prepare the entire cash flow statement. Now, here are the key theory aspects that you need to know. That after calculating of net profit after tax, some of the remaining profits must be shared amongst shareholders. In grade 12, we are now dealing with shareholders. They are the owners of the company, so they get the profits that remain after we have paid our income tax. In order to calculate our dividends paid, in this question we are given information and we're told on 1 March 2020, the ordinary share capital comprised of 800,000 ordinary shares. A further 200,000 shares were issued on this date. So we know that at the beginning, we had 800,000, okay? Then we issued a further, that is more, 200,000 shares more, okay? Then on 29 February, the company repurchased 90,000 shares at 81,000 above the value of the shares based on the average price of, okay, and then these shareholders qualify for final dividends. Okay, now we are supposed to calculate our dividends paid. There is a quicker way of getting your dividends paid. You simply say last year's final, okay, last year's final dividends. Where do we get this last year's final dividends? We go to the previous year, 2020, shareholders for dividends, 160,000. That becomes last year's final dividends. So last year's final dividends is 160,000. So I can come here and say, when I want to get my dividends paid, I simply say my last year's final dividends, which is 160,000, last year's final, plus here, this year's interim dividends. Then I add the current year's interim dividends. How much is that? We are given the interim dividend per share, which is 28 cents. But to how many shares were we declaring this interim dividend on? Here we're told that at the beginning we had 800,000 shares, and then we issued a further 200,000. That means we now have 1 million shares. And then I'll now say, multiply this by 28 cents per share. Then, on your calculator, how much do you get? You're saying 1 million multiplied by 28 cents. And then you end up with 280,000. So I'll take that 280,000, then I'll say plus 280,000 over here. I'll now say 160 plus 280. How much is the final amount? Say it again, 440,000. Now, here's the key aspect. It is dividends paid. That means it is a cash outflow. Brackets. Remember your format. Once an amount is paid, it's cash outflow. So here we got our dividends paid. Last year's final plus this year's interim. Let's quickly move on to the next one. Okay. Now we're going to look at the changes on our fixed assets. Now, some of the challenges would be the inability to calculate the amount paid for the new assets that would have acquired, or to calculate the amount that would have received from the disposal of our assets. When we look at the changes in our fixed assets, it is very important to remember that in grade 10, we did the addition of new assets, such as when we have a vehicle and then we get a new vehicle, that is the addition. In grade 11, we also did the disposal of assets, such as when we have equipment and then we dispose of it. So we have done some of this in grade 10 and in grade 11. In grade 12, we are now going to look at the cash that moves when we buy this new asset as well as when we dispose the asset. So we're looking more on the movement of cash. That is our focus in the cash flow statement. The information that we're given reads, we have fixed assets in 2020 as well as in 2021. But what is of great importance? Remember, you need to read your information and understand it. Here, our fixed assets are at carrying value, Then we're told, old equipment was sold at carrying value, and we have extensions, and we also have depreciation for the year. Now, we're going to take all this information, and what we're going to do is we're going to calculate the assets that we have acquired. You can see here, we are not being told whether it's vehicles or it's equipment. So it is all our fixed assets in here. Now, I've opened a fixed asset account at book value. You would understand that there are several ways of doing this, several ways. But for today's class, I'm going to show you the ledger account. Fixed asset, remember we're dealing with assets here. That means it's an asset account. So on the debit side, it's going to increase. On the credit side, it's going to decrease. And then I'll now say the balance at the beginning, 2020, it is your 8,320,300. And then, did we dispose any asset? Yes. Old equipment was sold at carrying value, 48,000. So I'll come here, then I'll say 48,000. Then the next one, extensions to the buildings were completed. That is my bank here now. We want to find that amount. And then depreciation, 234,000. So I'll come here, my depreciation is 234,000. Now that we have our depreciation, before we even punch in the calculators, I know they are ready already, and then we're going to record the fixed asset at carrying value for the year 2021, that is the closing balance. So I'm going to bring it here now. That is our 9,528,300. And then we have our balance carried down here, which is 9,528,300. Now, I need those calculators now. Let's see. So you're going to say 48 plus 234 plus 9,528,300. How much do you get? Say it again. You get 9,810,300. Is that correct? Yes. 9,810,300. Then you now say, from this figure, subtract 8,320,300. 8,320,300. How much do you end up with? 1,490,000. That becomes your bank amount. Now, when we come to the cash flow statement, remember this now goes under your cash effects from investing activities. You now say here, the purchase on fixed assets. So I'll come in, then I'll say purchase of fixed assets. All right, the purchase of fixed assets. Here I'm now going to show my 1,490,000. Remember, calculations must be shown in the answer book such that whoever marks your paper can see where you are getting the 1,490,000. Very key that once you are purchasing, that is a cash outflow because we are using cash to acquire fixed assets. So it is a cash outflow. And then, did we sell any asset? Certainly we did. We are told that we dispose an asset at carrying value. So we come here, then we say proceeds from sale of fixed assets. All right? And how much was that? 48,000. Cash inflow. Cash inflow. And then we are done with the changes in our fixed assets. We're given an extract from the Gauteng prelim paper for the year 2022. And here they want us to complete the note to the cash flow statement. So make sure that when I do the calculations, have a pen, have a paper, And you must also have a calculator so that you can also follow with the calculations. All right. So here we are told that the information was extracted from the records of Severance Limited. And then we have our income tax and we have our interest operating profit. We want to record the information here in our note. Now, we know that here we must record the profit before tax. But here we are not given profit before tax, we're only given the income tax. It is very simple. You have to understand that your net profit before tax is 100%. And then income tax, in this case, was 28%. And then your net profit after tax, would therefore be 72%. So what we want is the 100. So I'll come here, then I'll say, what is it that I want? I want net profit before tax, which is 100. What do I have? I have, the have must have two, the percentage as well as the rand. I have 28, which is your 2,072,000. I close that. Let us now punch this onto our calculator. We are now saying what I want is 100. What I have is 28. Then I multiply all this by 2,072,000 because that is what I was given there. And then I end up with 7.4 million. So that means my net profit before tax is 7.4 million. There we go, 7.4 million. Then the next part is my adjustment in respect of interest. So I have my interest expense here. I'm going to come and I'm going to add my 219,700. And then I'm also going to add my depreciation plus your 320,000. Then I'm just going to add these three figures together and I'll end up with my 7,939,700. Okay, make sure you confirm this figure again in your calculator. Then I'll end up with my 7,939,700. Let's move on to the next part of this note. And then remember, this is what we have just calculated. Now I'm coming to the changes in inventory. There is a quicker way of understanding the changes in inventory. You simply have to understand that inventory is an asset. And when I come to my assets, I'll say previous minus current. So I'll come to my inventories and then I'll say, in the previous year, how much was my inventories? 110,250. Then I subtract my current, which is 2022, which is 561,880. I'll punch this onto my calculator. And on my calculator, I'll now say 110,250 minus 561,880. And on my calculator, I'll get, you can see on my calculator, the amount is negative. It's a negative 451,630. So I'm coming here, it's a negative 451,630. Once it is negative, it is telling me that it is a cash outflow. Cash outflow. Very, very important that you get to understand. Okay? When your inventory increases, it is a cash outflow. A decrease in inventory is a cash inflow. Let's move on to the next parts, which is a change in receivables and then change in payables. When we come to our change in receivables, we have to now understand that we will have to add certain figures together to get this total amount. So make sure you have your calculator ready there. We will now look in the first year. All right. In the first year, you have your 342,000. That is your debtors. And then you will now add as well together, that is your accrued income. So you're adding these two figures, 342 plus 81,000, 342 plus 81,000. And that is going to give you 408,000. 423,000. I'm going to do the same in 2022, where I take the 1,279,400 plus the 48,000, okay? And then I'll get a total then. And the total is 1,327,400. Now, I have my two figures here now. And now I want to record them here. Change in receivables. I understand that my receivables is part of my assets. And if you remember what I told you earlier on, with your assets, you will now say previous minus current. So I'll take the previous year. How much was the previous year? It is 423,000. Okay? Minus the current year, which is 2022. Current year, it's 1,327,400. Previous minus current. And then let's punch that in the calculator so that we can see if it's a cash inflow or a cash outflow. So I'll now say 423,000. 423,000. Then I'll say minus 1,327,400. And then I'll get 904,400. You can see it's a negative. It's a negative 904,400. So I'll come here, cash outflow, 904,400, a cash outflow. Let's come now and we do the last part. And the last part is my change in payables, change in payables. To do my change in payables, I'm going to take the first one. It is my creditors here. It is my creditors. And then I'm going to add that with my accrued expense, that is for advertising. And then I'm also going to add my income received in advance. So I'm adding these. When I come to 2022, it is my 770 plus my 9,000 plus my 5.4. Let's begin to add how much it was in 2021. So we'll say our 338 plus the 8.7 plus the 6,200. And that will give you 352,900. So yes, 352,900. That is for 2021. In 2022, we are now saying our 770 plus 9,000 plus 5.4. All right. And then that is going to give you 784,400. Now we understand that with assets, it's previous minus current. With the liabilities now, it will be current minus previous. So I'm going to come here now. I'm going to say current is 2022. So I'm going to say 784,400 minus the previous, which is 2021. That is 352,900. I close my bracket. And then on your calculator, let's do it together. Let's see what we have on the calculator. You say 784,400 minus 352,900, and then you end up with 431,500. And you will see that this amount is a positive figure. Once it's a positive figure, that is your inflow. Okay, so remember we've already done our inventory, then you can now get your cash generated from operations. This is how it will be when it's finally complete. So our cash generated from operations becomes 7,015,170, and we bring it here. When we're still here, we know that once I have interest, I'm going to say interest paid. Before I even write the amount, I put in my bracket, and my interest expense was 219,700. So I'm going to come here and I say 219,700. And then the next part after this, it will now be probably your dividends paid or your taxation paid. Let's go, and then we calculate one of those. We are now required to calculate dividends paid. Dividends paid. Now, we know that with dividends paid, it's a simple task because we can simply say last year's final plus this year's interim. Now, with our last year's final, we have it already given, which is 212,000. So here I have my 212,000. Then I need to add this year's interim. Then we're given information which reads, on the 1st of May, the directors issued a further 2 million shares. So that means we do not have the 6 million, but we have that 2 million, and we had these figures at the bottom. These were given. And then an interim dividend of 22 cents was paid on 15 October. Now, you cannot get the number of shares as yet. You still need to come and read the third bullet, which says, on 30 November, 500,000 shares were repurchased. So you come here and then you have your 500,000 shares there in bracket. Now, you can now come to your calculator and you now say on your calculator, you can then say, remember, you are given the number of shares at the bottom, which is the 7.5 million that was given in your answer book. So you start from there doing the bottom up calculation where you say 7.5 million shares. You're going up. So the number of shares that were repurchased, that 500,000, you're going to add it back. Then you say plus 500,000. You're adding it back. Then you now subtract the number of shares that were issued, the ones that they said here on bullet 1, a further 2 million shares were issued. So you subtract that 2 million shares. That therefore means you end up with 6 million. It means at the beginning, we had 6 million. That is how we get the 6 million here. So we now know that at the beginning, we had 6 million shares, and then a further 2 million was issued. So it means it's 6 million plus a further 2 million, which was issued, to give us now 8 million shares. After the further 2 million, then an interim dividend was declared. So we now come, then we say, on the 8 million shares that we have, we multiply the interim dividend of 22 cents per share by 22 cents per share. And then it gives you 1,760,000. So I'll come here, then I'll say plus 1,760,000. And then I'll get my final amount for the dividends paid, which on your calculator is going to be 1,972,000. That becomes the dividends paid. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear learners, from the ad break. We are now going to do calculations that pertain to taxation, the income tax paid. All right, so we want to know the taxation paid for the year. We have a calculation that we're going to do. There are several and many ways of calculating the taxation amount that has been paid. But for this lesson, I'm going to open a ledger account. So at the beginning of the year, which is 2021, the balance is a credit balance, which is 160. That means it is a liability. That means at the end of the year 2021, we were owing SARS 160,000. So I'll come here and then I'll say my balance brought down 160,000. And then here I'm given a debit balance in 2022. So I'll come now to the debit side of my ledger account and I'll say my balance brought down at the end was 30,000. But I know it has to be a balance carried down. Here, 30,000. The next thing to record is my income tax. Well, I'll come here, then I'll say income tax. And my income tax for the year is 2,072,000. 2,072,000. Okay? And then now I need to find the bank here. I need to find the bank. Let's see if the calculator is ready. So I'll say 160 plus 2,072,000 plus 30,000. How much is that going to give you? 262,000. 2,262,000. That means here it's going to be the same, 2,262,000. So when I come here on my taxation, I'm now saying in brackets 2,262,000. Someone is saying, Mr. Simbi, can you please show us the calculation by opening brackets? Certainly. If I open my brackets, I'm coming here to say 160,000 plus 2,072,000. Then I say plus again, 30,000. Then I close the bracket. That is how I end up with that amount. So far we have our dividends paid. Now we have calculated our taxation paid. And then we can now calculate our cash effects from operating activities. Okay, there it is when it is now fully complete. Let's quickly come and now we want to calculate the changes in our fixed assets. The changes in our fixed assets. I'm going to open a fixed asset account at carrying value, but at the same time, I'm going to show you again another method of doing the very same thing. So make sure you take these two methods that I'm going to show you now. Okay, so with the fixed asset account, remember, asset account. That means on the debit side, it increases. On the credit side, it will decrease. All right, so I'm going to come here and then I'm going to say opening balance will be in 2021. So I have my balance brought down here. That is 13,590,000. Okay, and then I have my other balance here, which is my balance brought down. That is my 20,158,970. So I'll come up here and it becomes my balance carry down, 20,158,970. I have recorded these amounts. The next thing I'm going to come and record is my depreciation, which is 320,000. I have my depreciation here, 320,000. And then lastly, I'm going to record my disposal. So I'll come in, then I'll say disposal at carrying value was 67,590. So it's going to give me my bank here. So you're going to add this plus that, and then it's going to give you your 20,546,560, which is 20,546,560. Then I say this amount minus the 13,590. That's going to give you the 6,956,560. This is how we got that amount there. 6,956,560. The purchase of fixed assets. All right. And then the proceeds from fixed assets, we simply take the amount from the disposal. That is the amount there given. But there is another way of getting again this 6,956,560. Some may call it the five-finger method, the five-finger approach. This is an extract of your note number 3, an extract of your note number 3. Okay, so with this one, you will now say your carrying value at the beginning, that is going to be your 13,590,000. Your carrying value at the beginning. All right, and then you come, then you say additions. And these are additions at cost. Record the additions at cost. This is what we are looking for now. That's what we're looking for. And then you now say disposal at carrying value. Disposal at carrying value, you subtract it. So you have your bracket. And disposal was 67,590. 67,590. And then you come here, you also record your depreciation for the year. And your depreciation for the year is your 320, in brackets, 320. And then lastly, you have your carrying value now at the end. And your carrying value at the end, that's 20,158,970. 970. The question then is, how do I get that question mark? Let's grab the calculators and let's punch it together. Okay, let's move our calculator here on the side. What do we say now? We're going to do the bottom-up calculation. So I'm going to start with the 20,158,970, the one that is at the bottom. So I'm coming here to say 20,158,970. And then when I go up, I do the opposite of the amounts that are above now. So I have a negative 320, but when I come to it, I say plus 320,000. Can I go on? Then I have a negative 67,590, but I come to it and say plus 67,590. You still following me? Okay. And then on the next one now, it's a positive 13,590,000. I'm not going to say positive, so I'm going to say minus. That is 13,590,000. And then I end up now with that same figure, 6,956,560. So you get to get the very same figure again. It depends on which method you would have used. If you use the ledger account, you still get the same amount. If you use the 5-finger method, you still get the same amount. There are other methods as well that I would love to show you, but due to time, I will not be able to show you those methods. But it would be wise if you can choose which method works for you. And when you get that method, make sure you understand it. Practice it daily, because once you practice accounting daily, it stays in the fingertips. And then the exam becomes a walk in the park. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back from the ad break. Here's the curriculum scope, and we have not covered everything on the cash flow statement, but the green parts that are highlighted here, we have covered them thoroughly, and I believe you understand these concepts once you go over the lesson very well. And then here is the keywords and language recap. We spoke about the cash flow statement. We also did inflows as well as outflows of cash. Here is a recap of some of the common errors that you may make, and I would want to encourage you to avoid these mistakes. That is, when you incorrectly record inflows instead of outflows. That is, when an amount is a cash inflow, but then you end up putting a bracket that makes it a cash outflow. Or when an amount is a cash outflow and then you don't put a bracket, that means it's a cash inflow. You have to understand that in an inflow, no bracket, outflow, bracket. Keep practicing on these principles so that you do not make this mistake. The next aspect has to be on format. You have to know your format so that when you close your eyes, you can picture your format. You can see your note to the cash flow. You can see the entire cash flow statement with your eyes closed. Once you know your format, it becomes easy that you don't misplace items. Items that must be under your operating activities must never be in the investing or in the financing. You can only become so good when you practice over and over again. Here is the exam writing competencies recap. You need to ensure that you work on these so that you can become good in the upcoming examinations. For further practice, I want to encourage you to go and check these papers out, because you'll be able to do interesting calculations. Remember, in some of these papers, you don't have the entire cash flow statement, but you are given parts of the cash flow statement. Ensure that you expose yourself to all these type of questions, an entire cash flow statement, and even one where you are tested on certain parts of the cash flow statement. So make sure you go to the May, June 2019 question 5, November 2018 question 4, and even the November 2020 question 2. Thank you so much, dear learners, for joining me in today's class. I hope to see you again very soon. It is goodbye.